Welcome to this video. In this video, I'm going to be doing a stock analysis of Match Group. Now, if you don't know what Match Group is, it is a dating company. And by that, I mean they own Tinder and they own Hinge as well. Now, I have to say, I think this company is very, very cheap at the moment. Now, as you can see, it's doing quite poor ever since the pandemic ended. As you can see, up to the pandemic, the stock price really, really increased. And as you can see, it peaked all the way up here in 170. But currently, we are trading it all the way down here at 32.87. So I think it's way too cheap. And you can also see it has been trading sideways for quite a while now. So it's up and down, but overall it is trading relatively sideways. Now if I make each candle an hour instead, as you can see still, if we make the graph a bit smaller here, as you can see it's up and down quite a lot, showing this fluctuation, this sideways trading. So as you can see, it peaks all the way up here back in just about 40 bucks, and it goes down all the way again here, it's about 30 bucks, which would show we have quite a lot of swing traders in this stock. So currently it might actually be a bit cheap, and actually you could even get it all the way up to here, which would be a nice about 10 or 20% you could get there. Now, if you look at the earnings of the stock, as you can see, these past times hasn't been the greatest, but again, they haven't been the worst either. So as you can see, we had when they were up by 7.52%, one were up by 15.58%, and this one they minus 0.00%. What was minus about that? As you can see, so overall, as you can see, standardized, they were down by 0.002 cents, but their revenue was up by 1.13%. And then the last earnings here as well, as you can see, that was down by 2%. Now they do pay out dividends, which is actually not that surprising, as you can see, because their margin is very, very nice. So of course, when the margin is nice, it does surprise me they're paying out dividends. Also because they didn't used to do that earlier, but now they are paying out dividends, which of course is nice. Now if you look at the overview of the stock, there's one big problem, that is the debt. As you can see right here, they have a ton of debt, and of course that isn't the greatest thing, but they have a relatively large amount of cash, so as long as they can bring this debt down, it's going to be great. And one of the reasons they have so much debt is because they bought Hinge. Now, if you look at the PS and PE ratio, as you can see, it has actually just been falling and falling and falling. As you can see, in 2024, it had a PE of 16.19 and a PS of 2.62, and that has actually been falling, so it's just getting cheaper and cheaper. And I do think this is a huge, huge value play, because I just don't see the reason why it should be so cheap, because they have such a huge market cap on the dating market. Now, you should also see down here, I mean, just look at this, they're making more and more and more money, and they have very, very nice margins, so to be honest, I can't see a reason why they shouldn't just grow year over year. Now the revenue, as you can see, which countries are there in, as you can see, United States is a huge bulk of their sales, and so is all other countries, so they are international. And as you can see here, you can see which is making and bringing the most money. Of course, we have Tinder up here, then we have Evergreen and Emerging, and then we have Hinge, and then of course we also have Match Group and other stuff like that, of course advertising on their app platforms. But as you can see, Hinge is actually increasing revenue quite fast compared to something like Hinge or Evergreen and Emerging. So overall, I do think Hinge is going to be a huge, huge value driver, because it is gaining a quite nice reputation in the Western world at least. Now, if we go down here, as you can well and see the seasonals, as you can see, let me just make it for the past 10 years. As you can see, we have some years with huge, huge, huge growth, and we have some years with absolutely horrid growth, such as 2022, 23, and 24, and this year as well isn't the best, and also 21. So that is 1, 2, 3, that's 5 years in a row with quite poor performance. So I do think this is gonna absolutely boom in the future. And now I don't own any at the moment, but I'm highly considering buying some. Now, if you go into the technicals, as you can see here, for the day it's a neutral, and for the month it is a sell, and that is of course because it is trading downwards. And we've also just been quite a lot down in the bottom RSI, which shows that there is a sell momentum in the market at the moment. And also because we recently just had this earnings and it was quite poor, so it wouldn't surprise me for trading all the way down to about 27. So in the short run, I don't think it's going to be the best stock to own, but when it get a bit lower, I do think it's going to be a nice stock to own. My price point is, at least I do think it is going to trade all the way down here. We have seen these previous bottoms just around down here, about 27. If we don't do that and we simply just trade sideways for a while, let's say we trade sideways until early December, I'm just going to buy it up here, to be honest. Now the endless rating on this, as you can see, they're quite decent. 6 strong buy, 2 buy, and 16 hold. And the reason I think there's so many hold on this is simply because it's not going to be the most explosive stock in the world, but it is simply just such a huge play on the dating market. And as you can see here, the EPS, they're just guiding forward and forward and forward, and that's because it's online dating is just getting bigger and bigger in every single country. And in the Western world, I don't know anyone who doesn't even use dating apps, to be honest. Also, just look at the revenue. Again, it is increasing slowly but surely, and just increasing more and more. And because they were so huge, of course, if they come any competitors to Tinder or Hinge and so on and so forth, they can simply just buy them out. So I would say this is a huge, huge buy rating. For me personally, I do think it's going to trade down in the short term, But then long term, it wouldn't actually surprise me if it just increased quite a lot. I don't think we're going to trade all the way up here, but to be honest, it wouldn't surprise me if we're trading at this. As you can see, we do have some breakthrough points right up here at about 90. And when is this going to happen? Maybe a year, maybe two, so it's not going to be a 6-month trade. I do think you're going to need to hold this for quite a while to see a proper return on your investment. But that was my analysis on Match Group. If you like this video, please don't forget to leave a like and subscribe. And of course, if you want to see more videos like this, please leave the comment which you want to analyze in the comment section below.